Okay, it is 1 o'clock, and I always like to start on time. So, to thank the people who arrive right on time. Today's presentation is with Josh Borba. He is going to be talking to you about reverse mortgages and how it's going to be helpful for you to know and understand this, because some of your clients might have questions deciding if they want to go through a reverse mortgage, pull out a HELOC, or what their options are. So Josh has the information that you can share with your clients. So Josh, the floor is all yours.
Perfect. Yeah, I appreciate you guys having me here today. So let's talk reverse mortgage for realtors, a tool for your clients and also for realtors as well. So one thing I find when I do these presentations is you guys all look on the younger age group, but the average realtor is about 59 years old. So generally after I'm done doing this presentation, I usually find that realtor reaches out to me for themselves or one of their family members to go over this. So if as I'm going through this, you find something that sounds like you might want to explore a little bit further, definitely let me know. So with that, let's jump into it. Who am I and who is Zing Mortgage? So I've been in the business basically all my life. I started in high school at my dad's office. I've always been a top producer at our company. I'm a huge reverse mortgage advocate. I love the product. Anybody on here likes soccer? I'm a huge English Premier League soccer. So if you're an Arsenal fan, earmuffs, let's go Tottenham. Zing Mortgage, that's my company. We founded this in 2003 as MLS Mortgage, but we recently did a rebrand as Zing Mortgage last year. So we have a vision to revolutionize the way people achieve financial freedom and security through homeownership. And part of how they do that is through reverse mortgages. So when we do these presentations, it's all about what's in it for you. Why do you want to give a boring sales guy an hour of your time? And I know we have an hour set aside, but I promise you I'm not going to be an hour long. My wife can't even listen to me talk for 3 minutes about reverse mortgages, so I don't expect you guys to give me a whole lot more time. But so let's jump into it. So using a reverse mortgage has a lot of abilities on how you can increase your borrower's purchasing power, which is going to increase increase sales. I have some examples, a scenario on this one, increasing purchasing power, that we'll jump into in a little bit. Reverse mortgage can help you increase listings. So I don't know if you've ever been in a listing meeting with a client where you're talking about listing their home and you're talking about how much you think you can list it for, and they tell you, hey, that's not enough because that's not going to be enough money to buy my next home. But with the reverse mortgage, you can come in there and say, okay, let's list it. We're going to get that lower amount, which isn't what you expected. But if we go buy your next home with a reverse mortgage and bridge the gap with that difference there, you might be able to gain a listing there that you otherwise may have lost. Reverse mortgages, we can help people what we call right size. So that's go from a 2-story to a single story, go from a larger lot to a smaller lot. So you can think about ways to market this. You can go to your title company, get a list of those within our demographic that live in a 2-story home and potentially market to them to try to get them to move to a single-story home. Reverse mortgages can help you work with builders. So most builders, well, actually, I don't think I know any builder that actually offers reverse mortgages. So with the reverse mortgage, we're going to get the borrowers a little bit more money than they would have got if they just financed it regularly. So this can help them potentially with those upgrades that the builder offers. So you might be able to get the builder a little bit more money on that final sales price. Reverse mortgages additionally will produce more sales. So some ideas on there is gray divorce. Some call it silver divorce. As seniors get older, divorce is actually coming in at a higher frequency. So I'm going to show you an example further into this that you can get 3 sales potentially out of a divorce situation. Another way you can produce more sales is early inheritance. So Redfin did a study, I think it was April 2023, that showed that it was 38% of homeowners around age 30 required or used gift funds or down payment from a family member. So if you have a 30-something who needs additional funds for down payment, look to their parents, their grandparents. Do they have a home that's free and clear or a large amount of equity that they can potentially then do a reverse mortgage on that and gift some of that money to that grandchild or child to help them purchase the home? There's other ways you can do it. You can use a reverse mortgage. They could take the money out of their home and buy an investment property, increase their cash flow. They could sell a home and then turn around, take some of that money from that sale, buy a new primary residence, and then take some of that other money and buy an investment property, increase cash flow. And then additionally, you can market to different types of communities. So, these age restricted communities, you now have a product that you can start marketing to those with. So let's take a look at a strategy of increasing purchasing power. So a lot of these slides, I know you guys are kind of all over California. Generally I do this with more reasonably home priced homes, as opposed to the Bay Area, all in the $1 million. So this example uses a 750,000. I do have some other larger examples as well, but in this case, excuse me, we got a $750,000. We got a 70-year-old couple that has $750,000 that they plan on going in and buying a home and paying cash. But what they're not finding homes in their price range that they can afford. There's not much at 750. There's potential they are in the Bay Area, and they need to get a little bit higher. So if we take this reverse mortgage, we take that cash that they have available, we can get them a reverse mortgage that would fund about $400,000, which could get them up to a purchase price of about 1.1 million. So you got to think of how much additional compensation you guys can earn as realtors, but also you potentially have a client who was just going to give up their search and quit looking because that $750,000 wasn't going to get them anything that they wanted or needed. So now we can step in and help close that sale at a little higher home price. So here's the gray divorce situation I was talking about. You got a husband and wife, age 78 and 76, getting divorced. They can't decide on who's going to get the home. So what they do is they both decide, hey, let's sell the house, and then we can both go out and buy our own home. So, excuse me, this is a jumbo scenario for you guys in the Bay Area. They sell their house at $2.5 million. When you look at my screen, these estimated costs to sell, obviously it's going to vary based on what you guys offer. So don't stick to that. Just kind of look at the general idea behind this situation. But they sell this home for $2.5 after costs and everything. They each get a little over $1.1 million that they can then go take to their new purchase. And in this scenario, they both want to live in that same area because they got friends and family there. They don't want to move too far. So all the home prices are similar in cost. So husband goes in and buys a $2 million house. Wife buys one for $1.9 million. The numbers are a little bit different. Obviously, our purchase price is different, but the way the reverse mortgage works, the husband was older in this case, so he's going to get a little bit more money. The older you are on a reverse mortgage, the more that's available to you under the program. But in the situation, the husband takes his proceeds from his sale of the divorce home, buys a new house, has an additional $24,000 roughly available to him. The wife buys her $1.9 million home and has about $50,000 available to her. So overall, between all three of these sales, yes, it's a high dollar amount, but roughly $160,000 in potential commissions could be made from these three sales. So if you think about marketing these, start reaching out to divorce attorneys too. It's a good spot to start, and you could definitely generally get 2 sales, sometimes 3 out of these. Excuse me. So I have a quote. If you're a real estate professional and not focused on the retirement market, you are missing out on assisting the largest demographic of people in our history that will need housing choices for many years to come. That's from Lorraine, from a company called FAR. She's been in the mortgage business for over 18 years as a reverse mortgage trainer and educator. So, but what she's speaking to is the market opportunity, and it's huge. We all know that, we always hear the stat that, there's over 10,000 people a day that turn 65. NAR did a home study last year for 2022. And if you look at sellers aged 58 and up, that represented 43% of all home sales. That's huge. Most of us are targeted millennials. Do we think the millennials is the big one to go after? But a lot of us are overlooking the older homeowners. And then 53% of sellers in 2022 were boomers. So again, another big market opportunity. Seniors hold over $11 trillion in home equity. And by 2060, we expect the population of those age 65 and older to more than double. So again, just huge market that we cannot forget. And reverse mortgage goes really well with all these, with that demographic. Okay. So you all made it to this call, which is great. So you may or may not have a bad stigma about reverse mortgages, but in the industry overall, we're kind of moving past the bad stigma, but it's been, for a long time, it's always been, oh, you're getting a reverse mortgage, that's a horrible thing. But it's not true. Early on, there were some bad products that were created that had some equity share that caused a lot of the bad stigma, but most of those are gone. So programs that I'm talking about today are HUD insured, and there's another one that I'm going to talk about as well that's a jumbo. But these all have huge protections built into the program, so it's not the old ones that we used to hear about. But AARP and NRMLA, who's the National Reverse Mortgage Lenders Association, They did a survey and found that 9 out of 10 homeowners they were happy and satisfied with their lenders and the reverse mortgage product. So what that tells me is, or it should tell you as a realtor too, not to be afraid to actually bring this up to a consumer, because there actually is very strong consumer support that it's a great product and people are happy with the results. We often hear a lot of myths about reverse mortgages, and you're going to come across a lot of these once you start talking to these other people and your potential clients. I'm only going to list 6 here, but these are the 6 that I hear a lot. I'm starting to hear them less and less, but I still hear them a lot. But the number one, the bank owns your home. Couldn't be further from the truth. It's a reverse mortgage is a mortgage. It gets recorded against your property, like any other lien. So it's your home, remains your home. Some people say the reverse mortgage requires monthly payments. It's not true. The homeowner is required to pay property taxes, homeowners insurance, HOA dues if that's applicable, and any just general upkeep of the home. But there are no monthly mortgage payments required on it. And then what's actually going to happen over time is those payments that you would have been making are getting added to the loan. So the loan balance does grow over time, which erodes equity in the long run. But it's always important to explore this. And if you ever have any situations or scenarios, I can go through it and explore it and kind of go line by line and show you kind of what that looks like in the future for that potential client. Another myth we hear: reverse mortgages are a scam. Like I said before, these are crazy regulated. Like, I can't do anything without any sort of government regulation on these things. So they're protected. Seniors are a protected class. So it's not much we can do there's nothing that we can do as a scam. I'm sure there are scammers out there, but the products that we're focusing on are not scams. Heirs cannot inherit your home. That is not true. So however the estate is set up is how the property will pass. So if reverse mortgages are due and payable when at a maturity bench, which generally, is like the last surviving home leaves the home or passes away. So at that point, the estate then gets the property. So they can sell that property, and whatever equity remains after selling it goes to the estate. They can refinance that, pay it off, whatever means they have, they can pay it off. There is one thing to note. The reverse mortgage, like I said earlier, it is neg am, so that balance is growing. So if there's a situation where a borrower passes away and that home is the mortgage amount is beyond the value of the home, the heirs in the estate can buy that property back for 95% of the appraised value. So even if it's underwater $500,000, they can buy it back at 95% of whatever that value is. So it's a really good protection to know for the estate as well. You can sell your home with a reverse mortgage. There's nothing that restricts you. You can pay their home off at any point in time. There's no prepayment penalties. You can do a reverse today, pay it off tomorrow, and the only thing you would have incurred is the expense from doing the loan. And last myth we hear is the home must be free and clear. This one's a little tricky. We're talking about purchase reverse mortgages today, so obviously the home's not going to have a mortgage on it. But if we were to do just like a regular refinance reverse mortgage, it does not have to be free and clear. It has to be substantial equity generally to make it work, but it does not have to be free and clear. But that leads me to one other question I always get with realtors when I'm working on a reverse for purchase is, it never fails. Every time we're almost done the transaction, the realtor always asks me, okay, how much money is the borrower getting every single month? And with the reverse for purchase, all the funds that are available under this program are being used for that purchase. So there isn't any additional line of credit or monthly payments or anything like that that's going to be given to the borrower unless they want to overfund the loan. So they can actually come to closing with more money and then create those types of things. But generally, when you see a monthly payment, line of credit, cash out, those are all referred to just doing or referencing like a refinance of a reverse mortgage and not the purchase. So let's get a little bit further into what actually is a reverse mortgage. So reverse mortgage is essentially a loan. And for age of homeowners, we have 2 products, either 55 and older or 62 and older, depending on the product. But it allows you to convert a portion of the home's value into cash without the option of making a payment. And the reverse for purchase looks at, buying a potential home using the proceeds from that reverse to purchase the home. So our 2 main products is the HECM, that's home equity conversion mortgage. And then we have a jumbo, which is often referred to as a proprietary. Both serve different needs and different groups of people, but both can be used for purchases. So our main differences, I kind of highlighted off to the right there, you can see highlighted in blue, the obvious main differences between a reverse and a traditional forward. reverses are age restricted. There's no monthly payments. On a reverse mortgage, your equity is going to decrease. But one of the big ones to point out is this loan is a non-recourse loan. And what that means, what I mentioned before, is if the home basically stands on its own. So if the borrower passes away or whatever, the estate's not liable for anything above and beyond whatever. Well, the estate's not actually liable for anything, but it's a non-recourse, the home will stand on its own. So this next screen right here shows, a lot of people ask like, hey, what's my required down payment on a different purchase price? So if you got that kind of lighter cream color on the top, that'll show your purchase price across the top. And along the left side, you got your age. Anything in pink in here is where a jumbo product would work better. Anything in blue is where the HECM is going to work better. So generally with the HECM, anything under like 1.2 million and less is probably going to be more beneficial to stick with the HECM. Anything beyond that, 1.2 to 1.5, there's going to be a side-by-side comparison we're going to do. Beyond 1.5, then most likely it's probably going to be the jumbo product that's going to work the best. But just to give you an example, so if a 70-year-old bought a $750,000 home, they would need about $467,000 to close. So the reverse would cover the difference there. And these numbers include closing costs. But again, these numbers, I know this is going to be recorded, so these numbers are all kind of a snapshot in time. The amount of money available to you on a reverse mortgage is based on interest rates and the home value of the borrower's age. So if rates go up, there's going to be less money available to you. If rates go down, the amount of money increases. So we're kind of hopefully nearing the peak of where rates are, and I can hopefully see them start to come down here. Fingers crossed. But so let's look at a jumbo scenario. So our jumbo product, like I mentioned, we can go down to age 55. So this gentleman, he's age 60. He's looking to buy a $2 million home. He sold a home for $1.6 million. Netted about just under 1.5 million. So if he were to go and buy this house with just a traditional conventional mortgage and get a $528,000 mortgage, his payment is going to be roughly $3,500 a month. But if he flips that around and takes those proceeds and then uses a reverse mortgage to finance the difference, not only does he eliminate $3,500 a month, he's going to end up with roughly $76,000 in his pocket, which, somebody buying a $2 million home, you don't think that they're going to need that much money. But this demographic, we find that even like the higher net worth people are still tight, living month to month on a strict budget. So every penny helps in every situation. But it's important to talk and at least offer this up to your clients as an option. So now you'll get asked if you start doing these, how does this loan get repaid? It's generally repaid at the time that all borrowers pass away from the property. It can be paid off with any means that the estate has, whether it's paid off through sales or refinance or whatever the case may be. And as I mentioned before, family members can obtain a short payoff of 95% of the appraised value of the home value, or 95% of the home value. Talking eligibility. So anybody who's 55 and plus, you can potentially have these conversations with. The property has to be owner occupied within 60 days of closing. We will allow a rent back for 30 days max. So if you're writing a contract, don't do a rent back more than 30 days, or we'll have to go back and amend that contract. Property can be a single family, 1 to 4 unit. We can also do condos with the HECM product. The condo has to be FHA approved. The jumbo proprietary can do the condo with less restriction. So even if you have like a $600,000 condo, the jumbo may work in that situation if it's not FHA approved. Down loans can't be borrowed. So any other source, cash, checking, savings, investment, gifts can be used. And then I don't know how deep you guys go into pre-qualifying, your potential clients when you talk to them. But if you find out that anybody had like a foreclosure or short sale or deed in lieu, typically our waiting period is 3 years. But always, give me a call and I can walk through any scenario with you to see if there's any exceptions to whatever happened, and see if we can make work or make sense of the deal. The other part we look at when we do a reverse mortgage is we have 2 tests that we look at. We look at the borrower's credit history and the residual income. So I still see marketing out there that says reverse mortgages don't require any income. It's not true. Every reverse mortgage that we have requires income and credit history review. We don't actually care about the credit scores or anything like that. We just care how the credit's been used. So if you got somebody who's had a lot of lates on something, we'll look to see if there's an extenuating circumstance. So, for example, one that really works a lot of the times, let's say a spouse passed away, and when that spouse passed away, they lost, some income from that spouse passing away. That generates a valid extenuating circumstance for us that then allows us to be able to do this loan for them. And then the other part we look at is residual income, which is similar to any other, like a VA loan. We always just look at the residual income to see what's remaining at the end of each month. But don't want to bore you guys too much details because, I can walk through any of these situations with your borrowers or your clients. But if you do come across one and you want to put an offer in, there's certain restrictions that you need to know about when you do write an offer. Seller concessions on a HECM are not allowed. Seller is allowed to pay fees that are normal and customary. So if you're in an area where the title fees are split 50, title escrow split 50-50, whatever the case may be, if that's normal and customary, seller can pay for those. Our jumbo product though does allow for up to 6% concessions. So there's less to worry about there on the jumbo side. If there's anything that's personal property, similar to just a traditional forward loan, anything with traditional property, you need to write, a statement in the contract that there's no value given to whatever that personal property is. So if a dishwasher, let's call it like a pool table or whatever, transfer the property, just transfer it at no value. Again, max seller rent back 30 days. Any repairs that need to be done will have to be done by the seller though. So when you look at a property and if there's a ton of repairs, potentially look at structuring that deal to where, the purchase price maybe is going to be a bit higher than allows for the seller to go in and make the repairs that are going to be required. And those will need to be done prior to closing. So when would you recommend a reverse mortgage to your clients? Been through a lot of these scenarios already, but you got somebody who wants to preserve cash flow. They don't want monthly payments. Somebody looking to right size, downsize, move closer to family, retirement communities. Somebody looking for that early inheritance that we talked about, or gray divorce. A lot of opportunities to go out and market to people. And as you have conversations with people, always be listening for, little clues as they're talking about what they're truly looking for. I know you guys are mainly focused on like the product or the home and what they're looking for in their home. But a lot of times I'm sure they spill the beans and tell you everything about their financial situation as well. So as they're telling you those, if there's little clues that you pick up to go, oh, a reverse mortgage might be great for these guys, it's worth exploring. And whether they do the reverse or not, they're going to appreciate the fact that you're offering additional products for them to explore that may help them retire better. So this product is really a niche within a niche. Like the awareness of a reverse for purchase is still relatively low. I love this product. It's hard to gain attention though. Part of it is, breaking into the realtor base. A lot of realtors don't fully understand the product. So as you're putting offers out, you're going to have the listing agents who are going to be questioning you on everything. So on every single reverse for purchase I do, I always end up calling the listing agent and explaining exactly how everything works. So they're fully aware of all the nuances of the product. But it's gaining traction, and the more we do it, the more we spread the word, the more there's actually good education going out instead of these bad things that the hairdresser or mechanics telling people, the better it's going to be in the long run. So older homeowners are buying homes and they are financing them. So let's take a look at one more strategy before we wrap this up. So told you I'd be quick. So hopefully we leave enough time for some questions for you guys. But you can buy, like I mentioned, you can buy a multifamily as long as one of the units are owner occupied. So got a 65-year-old couple looking to buy a duplex. And with this duplex, if they go without the reverse mortgage and finance it, they will end up with positive cash flow of about $153 a month, which isn't really a lot of money. It covers their mortgage though. So that doesn't seem like a bad option. But if you look at doing it with the reverse mortgage, they're then now able to retain a bunch of the funds that they got from the sale of the proceeds of one of their homes. Plus that cash flow goes from $153 a month to $1,500 a month in this scenario. So again, this demographic is living, not all of them, but a lot are living on month to month and really tight budgets. So every dollar counts. So another scenario for you to think about. So as you come across these, prepare your client. Obviously we want to do the pre-approval first. Reverse mortgages, whether it's the HECM or the jumbo, require counseling. So the counseling is just an upfront session done through independent third-party company. It takes about an hour. By the time the borrower gets to counseling, it's generally after I've talked to them. So when they get to counseling, they shouldn't learn anything new, but it is a protection that's built into all the programs, and it's required. California has a 7-day waiting period after doing counseling before we can do anything that would incur an expense. So if you do have somebody that's looking at a reverse, definitely let's get that counseling done early so we don't end up with any delays on ordering the appraisal. An important thing though is don't list their home before we find out that they can qualify for a new purchase reverse. Not everybody qualifies, so we want to make sure that before you sell their house and get them out of that home, that we can actually go and get them a new home with the new reverse mortgage. So a few other things, we talked about: no seller concessions, gift funds are okay. The last thing I'd like to mention too is a lot of the sellers, agents want to control the title and escrow. Us as a company, we don't care about that, but the problem is most title companies don't have the ability to generate HUD-1s anymore. Reverse mortgages don't fall under TRID, so we still use a HUD-1 versus a CD, and not every title company can do that. So oftentimes that slows our closing down. So use whatever title company you want, but just know that if it's a title company that's not fully vested and able to work on a reverse, it can cause some potential delays. So that is that. Our company's in 9 states. So if you guys have clients, family, friends, we're able to help in any of these states. But with that, let's open it up to some questions if you guys have any. I'm tired of hearing myself talk.
Josh, do you provide any marketing materials that the agents can use and post or, have available for their presentations?
We definitely have some flyers that we can provide.
Okay.
Sure. Yeah.
Does anyone have any comments or questions that they'll like to ask Josh?
Okay. What was on HUD-1 and CD that you mentioned at the end?
Yeah, so most of our loans that we do now on like what we call the traditional forward side uses closing disclosures. So your CD. Reverse mortgages still do it the old way, so we still have a good faith estimate and a HUD-1. So a lot of the title companies, they've retired all that software that used to do the HUD-1s. So you'll find that these ones that can't do it, they have to manually go in and somehow figure out how to type it, and some pull out typewriters to make it work, since they don't have that technology. So that's the only reason I bring that up. Again, I don't care who the title company is, as long as they're able to generate that HUD-1. We're able to teach them everything else that they need to know on how to close the deal correctly. But that's the one part we get hangups on with some of these title companies.
Okay, thank you.
Sure. So, sorry, I know I went kind of fast there. There's so much information here. I could talk for hours and hours about these things, and reverse mortgages have a lot of nuances to them that it's important to make sure you work with somebody that fully understands them, so they can get you into a bad spot, especially on a purchase down the line if you don't structure it correctly. But
this is really great information, Josh, and I am going to pass it on to a couple of my clients. I didn't know all about this, but this is really good stuff to know, and I'm passing it along. So you might be getting a call.
Perfect. I appreciate it.
So Josh, since you're based in Auburn, what is the typical way of introducing you to future clients, like what Lisa was saying? Is it going to be a phone call with the client? Is it a face-to-face meeting, a Zoom meeting? What normally happens?
Really depends on the client. So since we're in 9 states, I don't have people physically located in 9 states. My company kind of early on adopted the let's just do it remote kind of method over the phone. I know for the longest time, the industry said, it's got to be done at the kitchen table. You got to go to the kitchen table to close these deals and meet the people face to face. There's a lot of reverse mortgage borrowers who actually do want to meet face to face. So those ones, if they're adamant that they want to meet face to face, pretty much anywhere in California, it's easy for me to get to and meet face to face. But generally, the first introduction is usually either an email introduction or a phone call or a 3-way call. However any of your agents want to do it, I'm happy to support whatever method it is. Even if it's Zoom call, Microsoft Teams, or whatever, we can record it. It's the good thing too, like the borrowers are a little bit more computer savvy, where we can do something like this and record it. and I can go through and explain all their documentation, like the quote to them and how everything works. And then they can then share that with their family or their financial advisor, or whoever they need to share it with. That works really well too. So I'm open to anything and everything. We're flexible here.
Okay, great. Thanks.
Yep.
Any other comments or questions? I haven't heard of that before, but you said that after the initial meeting and then they have counseling. And I thought
Correct.
that was a really great point, because especially with elder abuse, we want to make sure that they truly understand what they're getting into. And so having that third party to do that counseling, I think that's a good feature to have.
Yeah, that's perfect. The counselors are trained to look for a few things. One, they're trained to look to see if they are a victim of elder abuse, but they're also looking at competency also. Throughout the hour and 20-minute session, they're actually asking questions and kind of testing them to kind of make sure that they're not, well, they're fully functioning cognitively. Just because, obviously a 62-year-old is not going to have the same mental capacity as like a 95-year-old. So they do go through, and it doesn't matter. It's the same protocol for every single person. It is one of the good things. It's kind of a pain. California made it even more of a pain by adding the 7-day waiting period. But that's California. We have to make things difficult.
So true. But I mean, just agents, just for your safety, it's great that they have these protocols in place, because if there is a situation of elder abuse, then we get dragged into it too. And so this is protecting us as agents at the same time.
Yeah, exactly. Yeah. As a protected class, we got to be really careful how we do everything. So all the protections we get is better.
Mm-hmm. Last call. Any other comments or questions? I have this recorded, so if anyone wants a copy, just let me know and I can forward you the link so you can go ahead and share this with or watch it again to get the information. I love the scenarios that you gave, Josh. Makes it a lot more practical and gives us agents, ways to go about talking to our clients regarding reverse mortgages. So thank you very much for your information.
Perfect. Yeah, and if anyone wants marketing stuff or has any ideas on how to market to other people or wants some ideas, feel free to reach out to me. I'm happy to help you guys.
Okay, great. Thank you all for attending, and we'll see you tomorrow. Have a great afternoon. Bye, guys.
Bye. Thank you.